Hey guys, my name's Ravi Sharma and I'm the founder and buyer's agent here at Search Property. Thank you so much for joining me on yet another episode of Search Property TV. If you're new here, smash that subscribe button, hit the bell icon, and of course, hit the like button because then the YouTube algorithm's gonna bring it out to the people that need it. Now, in today's video, we are talking about the Australian property market update. So much is happening right now. Today, as of recording, 4th of November, it is actually the US election day. And so everyone has their eyes on who wins, Trump or Biden. So I want to go through exactly what that election means for the Australian economy and the property market. But also, yesterday, we got announcements of two major things. One, the RBA cut their rates to 0.1%. So that's major. It's never happened before. It's at the lowest it's ever been. And my thoughts on that, of course, as well, the causes and effects on the Australian property market. But the other big news was Commbank announcing no forced sales until September 21. Now, what does that mean? That's major news as well. And it's something that I want to revert back to your attention. A few videos that I've made 3-4 months ago. I made one specifically about COVID and the Australian property market. You definitely need to go see that. It's a 40-minute video, but it effectively covers everything that I expected would happen for the next 6 to 12 months, and it's playing out exactly right. So I'm not someone that goes around saying, I told you so, but in this case, it really is, I told you so. 6 months ago, nobody knew what was happening. I put out my predictions about what I thought was going to happen, and it seems like it's playing out. So I think there's going to be value there. Watch all the way through, double speed it if you need to, but there's some real gold in there, so check it out. Now, as soon as the RBA rate was cut yesterday at 2:30, while most people were getting drunk in bars and pubs watching the Melbourne Cup, I was actually keeping an eye out on the RBA rate cut. I believe it was about 2:32 that I actually put down a full breakdown of exactly what the RBA rate cut was and why it's so significant, even though it was a 0.15% basis point cut. Now, that's another plug for the private Facebook group. I don't make any money out of it. I just like sharing in a community and build a community around personal finance and Australian real estate. These are two things that I think are just either overly spoken about when it comes to Australian real estate. Everyone seems to have an opinion about it, but also personal finance has always been this taboo topic that nobody wants to talk about. So when you're really needing support and needing people to reach out to, you can't talk to family friends because they don't want to tell you what their finances are like. They also want to, be competitive about it. And I know for coming back from an Indian background, it's especially important because nobody talks about it, but everyone has their opinion and suggests that you should do something with your own money, but they won't actually tell you what they're doing with theirs. So in that community, it's really about sharing as much as possible. This YouTube channel has allowed me to share my portfolio and it's inspiring a lot of you. So I'm very excited by that. It makes me very grateful and also makes this so satisfying to actually be putting out videos every single week. In that group, we have a good community. I'm asking questions. I'm putting information out there. I'm open to more questions from you guys as well. So if you're not part of it, there's a link in the description below. Definitely come join that. Let's jump into this Australian property market update. I think you're going to love it. So we're going to start with the Reserve Bank cutting interest rates to record low of 0.1% during COVID-19 recession. So I'm not going to go through each and every article that I've got here. There's about 3 articles. And I just want to pick out the main points here. But the Reserve Bank has cut the interest rate to a record low of 0.1%, as the bank's governor confirmed Australia was not out of a recession. I made a video previously on the channel saying that we're not out of one. But the key point here, and it's broken down here, which is very nice of ABC, the official cash rate is expected to remain at 0.1% until 2024. Guys, that is like 3.5 years away. And we also got told that, oh no, for the next 3 years, we're going to be at 0.25%, but now we're at 0.1%, and they're also saying it's now 2024, not 2023. Can we see a pattern happening here, guys? This is where I encourage you to start looking beyond the media headlines, whether that's coming through to YouTube channels like this or looking at a range of sources in terms of information and then breaking it down to go, okay, I need to overlay that information and really understand how does this affect me and what's the truth in this. Now with the RBA, I've been saying it for months, they have no other option. They have two things that they can do. one, cut rates, and two is quantitative easing. Now, with both of those things, it's going to lead into asset price inflation. I'm going to tell you why. Not because I'm a buyer's agent, not because I have a lot of property, but because I understand basic economics, okay? Now, a lot of people are going to say unemployment all-time highs, we've got job losses, the economy's up shit creek, we've got no migration. How are property prices going to go up? Property prices do not go up simply by just supply and demand. Yes, that is a major factor. But if there is something I want you to take away from this cut is the fact that with rate cuts, with quantitative easing, we are devaluing our currency. That means that when we could buy with $100 heaps of grocery 5 years ago, with that same 100, we are buying a lot less, okay? We also see it with a lot of packaged goods. So if you were paying $4 for Cadbury, fun size pack, 12 pack or whatever it is, if that was for $3, now it's still $3, but the amount of weight that each packet holds has gone from, say, 200 grams to now 150 grams. So that's just inbuilt into the system. It means that you think, no, inflation's not occurring, but it definitely is. And it's occurring because we are cutting rates and it's been on a downward trend. I think the last interest rate increase was like 9 or 10 years ago. So when people say, it's all great when rates are getting cut, but what happens when rates go up? Rates can't go up. That's what I'm trying to get you guys to understand is that it only goes up in one scenario, and that is huge amounts of inflation, hyperinflation for some people, and that's when we're going to see interest rates go up. But by then, if you're already into hard assets, inflation's going to kill your debt. It's just not going to mean much, and that's when you're able to, people are going to start making $1 million a year, which is the equivalent of, say, people making $120,000 a year. 5 years ago, it was really unknown to go, wow, someone's making $100,000 a year. Wow, they must be like a pure C-level executive. Now it seems like everyone gets 100K. This dumb money that's being flowed around into the system, all this money that got created, there's tax cuts, there's stimulus still coming through with Jobkeeper, JobSeeker, and yes, they're coming to an end. Yeah, I get it, okay? I get it. But it's still in the system, and it has been it's going to be a total of 1 year of people making money by just sitting at home, okay? So this money will then eventually lead to inflation because there's more money supply into the system. And what that's going to lead to is asset price inflation. So hard assets, right? The reason why you're seeing gold go up and you're going to see asset price inflation with property prices, it's not because, magically everyone wants to buy property. No, it's just how money supply works. And this is why it's very interesting to see that we have now gone below what we were expected to see as the lowest point, being 0.25% basis points as the cash rate for the RBA. They committed to saying, no, we're not cutting further. It's extraordinarily unlikely. Now, the reason I use exactly those words is because that's what Robert Lowe is saying now, that it's not going to happen. We're not going lower than 0.1%. We're not going into negative. Don't be silly. Don't be stupid. We were also believing you guys to say that we weren't going to drop below 0.25%. Now you guys have cut it to 0.1%. What does that mean? You've lost all credibility, and I've been saying this for so long, guys. I'm very passionate. Don't take this as like me trying to rah-rah you and get you motivated to and convince you to do something. But what I'm saying is, don't just listen to the media headlines. Don't just listen to me. Look at what I'm saying, base that and overlay that around why I'm saying it, but also what credibility do I have, right? At the end of the day, everyone's got their own viewpoints, and I'm totally accepting of what yours is. I'm finding there's a very good trend around people that are optimistic, even during dark times, will do exceptionally well when things improve as well. The people that are negative right now and hoping there's going to be a crash, I've got a perfect article for you right now. Commonwealth Bank places freeze on forced sales for virus-impacted customers. Holy freaking crap. You remember how when people were talking about, hey, Jobkeeper's ending in September or October of 2020? And that means when Jobkeeper and JobSeeker ends, we're going to see the housing market crash. Yeah, okay, great. So at that time, I predicted that we were going to extend Jobkeeper and JobSeeker because if they're spending this much money, what are they going to just go, oh no, because we said we were going to stop it, we're going to stop it. And if that means the economy is going to get destroyed, then so be it. No, like that's no logical sense. They've obviously gone this far in. If you've gone 80% in, you're telling me you're not going to go the extra 20 to actually get your objectives and results. So clearly it was always going to get extended. So it gets extended. Then people are saying, well, mortgage repayments were paused. Now that's going to end in September and banks are going to say you need to force and you need to sell because you can't afford to hold, your mortgage. You can't make your repayments. Okay. But I also said that they're not just going to go, hey, we've paused it for 6 months and it's all great. But now we're going to let it go and you're going to have to force sell and the whole industry, the real estate industry is going to collapse. The housing market's going to crash. Okay, they just extended that as well. Okay, so now Commonwealth Bank comes out yesterday and says we're going to place a freeze on forced sales until September 2021. Why is this important? Well, if you were the lucky few that actually went in and said, you know what, I don't care what the media headlines are saying. I've got a secure job. I'm buying positive cash flow property under market value with a research team. Well, I'm now mitigating my risk, right? So I've gone in there to buy something that's affordable, that's got a long-term tenant in there and has certainty of cash flow. So they've purchased property and now they're realizing after 3 months, they're getting $30,000, $40,000, $50,000 increase in value, not because there's a huge amount of demand solely in these areas. Yes, that is a key factor, but it's also we keep cutting rates, we've got quantitative easing, and inflation is coming into the system without people actually realizing. So those guys are making the benefit. But I also know that there's people that were wanting to buy in January 2020. We are in November 2020 and they still haven't moved because it was thought that the housing market was going to crash. Why would I invest now when the housing market's going to crash in 6 months? So they get to September and then they announce the extensions and they go, wow, okay, well now it's not going to crash in September, it's crashing in March 2021. Okay, so now do we wait till March 2021 hoping this market's going to crash? No, because now Commonwealth Bank comes out and says September 2021, now we forced, frozen forced sales. So now do we wait till September 2021? So let's just look at that. If you waited from Jan 2020 to September 2021, if the economy in that time actually improves and you've got cheap money, which is exactly the case with all these cuts, you've got people who can afford a lot more because they're making a lot more and saving a lot more because they're not traveling. So that means all this pent up demand, this confidence that increases as the virus, gets under control in Australia at least. You've got then migration coming back into the system. Tell me, how is this market going to crash? Okay, unemployed people. But do you think unemployed people were the only ones looking to invest? A lot of people have still had jobs in this time and have actually been making more money than they've ever made before. On top of that, they now aren't traveling for work, which, on average in Sydney is like an hour each way. So they're saving 2 hours a day. So they could be increasing in terms of side hustles, in terms of research. And on top of that, they aren't traveling overseas. So straight away, they're saving about $10,000 to $15,000 a year. If they save that this year and they save it next year, that's $30,000, enough to buy a property on top of the savings they're making. So look, I don't want you guys to think that I'm ranting here, but essentially the market update is that things are turning, and I'm going to go through a few more things in this video. So do keep all the way through, keep watching, because I think it's going to bring you a lot of value. If this is playing in the background, awesome. If I'm in your living room, it looks nice. If I'm in the car with you, awesome, drive safely. But essentially, if you are paying attention, there is a lot of things happening that have been happening for the last 3 to 6 months. We are going to see something amazing really come out of this for people that are on the right side of it. Too many people during COVID have become defensive, have become super conservative, and some people, fair enough, like they're in a situation where they have to be. But 99% of people are just scared. There's so much fear into the system, and if you sit there and you watch rubbish TV, that's just going to instill more fear into you. So Commonwealth Bank will freeze forced sales for customers who have defaulted on their loan repayments due to financial ramifications sparked by the coronavirus pandemic. The country's largest retail bank has initiated a moratorium on forced sales until September 21. In an email between CBA and FCA obtained by News Corp, the bank confirmed customers still impacted by the health crisis may have certainty of remaining in their house for the upcoming holiday season. This was always going to happen. They weren't going to kick out people. Now it comes across like CBA is like this amazing bank and they're saving us and whatnot. My point of view is if they allow people to default and they have to force sell their homes, CBA loses a lot of money. That's what's the reality, right? So don't sort of look at this and go, oh my God, CBA is the best. No, it's not. They're just looking out for themselves, but in turn, it's marketing and communications and perfect PR. The other thing to look at is the change in dwelling values. Now, I know a lot of people sort of go, oh, it's not reliable. Don't worry about it. Like, it doesn't make any sense. Guys, stats don't lie. And this is lag data. I totally get it. But when you've got lag data, you've got media headlines overlaid on top of that, and then you've got ourselves, a lot of buyers agents are now seeing the ramifications of this, is you've got cheap money, you've got first home buyer incentives, all overlaid on top of each other. We are seeing on the ground, we are missing out on properties left, right, and center because people are paying ridiculous amounts over listed prices, okay? So when I see this and I see, what has been happening on a more general level in these areas, because they look at, a general area, I can totally attest to it because some of this stuff is just insane. So in the past 12 months, obviously I'm not looking at 12 months because that would have put us pre-COVID as well. So we're more interested in the 3 months and the past month itself. So we're seeing with Sydney and Melbourne, we are seeing that decline there, but in the last month, we saw Sydney sort of hold prices. 0.1% is not growth. It's not a booming market by any stretch of the imagination, but it's about being real here. We've got Brisbane looking very solid, Adelaide performing really well. I think we are seeing in Adelaide, we are seeing the same sort of fundamentals that I saw come Sydney 2015, 2016. I saw the same thing happen in Hobart in 2016, 2017, and I'm seeing the same thing now in Adelaide. Guys, most people think, and limited by their own beliefs, that like, oh, who the hell lives in Adelaide? I don't like that place. But at the end of the day, this isn't about you and I. This is about looking at logic, looking at data, and looking at understanding. This is finance. This is just a vehicle to get you to financial freedom. I don't particularly like holding property and going, oh my God, I've got so many properties, like it's amazing. No, I like the fact that the vehicle that is property will allow me to have financial freedom and positive cash flow, passive income. And it's a perfect note. You should definitely check out my video about my portfolio. And I break down exactly what I've purchased, how I've purchased it, and what they're valued for now, and what sort of growth I've seen. I'm very big on regional centers. And that's why you were seeing here in the last 3 months, 2.1%, one of the highest outstripping all of the capital cities is regional New South Wales at 2.1%. Regional Victoria, fair enough, is seeing a bit of that decline come through because of COVID and the restrictions. Regional Queensland's done well. Regional South Australia seems to have slowed down a little bit. But then when you look at combined numbers, combined capitals in the last 3 months has been negative 0.5%, and in the last month has been positive 0.2%. Whereas the combined regionals has been up 1.3% in the last 3 months, and in the last month has been up 0.9%. Regional housing markets continued to outperform the capital cities. Broadly, Corelogic's combined regional index has held relatively firm through the worst of the COVID-related downturn. According to Mr. Lawless, the past 2 months have reversed the previous mild falls across the combined regional areas. In the 7 months since March, regional dwellings are up 1.7%, while values across the combined capital index has fallen by 2.3%. The newfound popularity of working from home is only one factor helping to support regional home prices. More affordable price points, lower densities, and lifestyle factors are also underpinning the relative strength. So guys, I was purchasing from the beginning 6 years ago in regional centers because I understood the fundamentals of supply, demand, why there is growth, and how we're going to see the next sort of 20 to 30 years play out. I didn't expect COVID was going to happen. COVID, all it did was accelerate my thoughts, which were people aren't going to have to go into offices anymore. Most people are going to become contractors, right? Specialized in their own niche. I think most people in 20 to 30 years will run their own business. They aren't going to be employees. And this is where we're seeing this massive change where people are, sitting in Bali and they're working from a computer, from a laptop and doing, servicing clients all over the world. This is happening. And it's been happening. Now COVID's just brought it to the front of mind. So if you are able to afford $1 million in Sydney, now $1 million probably gets you like a nice 3-bedroom house or a nice 2-bedroom unit closer to the city. versus $1 million gets you waterfront property in regional Victoria. This is where people are now starting to question both. When I was saying that people didn't all lose their jobs, some people, like small businesses, have actually prospered. They've brought their business from being, a cafe or, being a restaurant to an online business. And so they're able to just go, you know what, we don't need a storefront. We need warehousing. We need a good storage system because everything's going to happen online. So we know what's happening in terms of what's been happening for the last 3 to 6 months. We have already seen that consumer confidence is going up. Don't worry about just unemployment numbers. Oh, okay, more homeless people means we can't do anything and the economy's gone to shit. If there is more unemployed people, that means they have to keep pumping in to the system more quantitative easing, more stimulus money, and they need to keep cutting rates because that allows for more people to have more money available. That's on one side of the spectrum. If you look at the opposite side, it means that if we're still having that occur and you've not lost your job and you're actually doing better now and saving more, well, you can take advantage of the situation. You can take advantage of the economy and what's happening and take advantage of the opportunity that is presented to you. This will be the best time to ever purchase property. Now, that's not me just saying it because I'm a buyer's agent and you should come through to me. I'm saying in general, if I had seen this occur 5 years ago, I would have said it then. And if I wasn't a buyer's agent today, I would still be saying it, but I wouldn't probably have this channel. So take what you will from that. But essentially, I think it's going to be the greatest time. I can't wait to be purchasing more property. And when we're considering what Australia is doing, we need to know Australia in the context of the world. A lot of people come out and say, oh, well, Australia's debt levels are huge. And, the debt to income ratio is, it's crazy. It's the highest in the world. That means it's going to crash. It's a bubble. Okay. So there's two things that I want to bring to light here. First, you're going to find is the One Roof Velocity House Price Index for regions in New Zealand. Okay, guys, the one thing that I want you guys to see is value change since March 25, post-COVID. Look at the amount of growth, and this isn't just in one specific area. We are seeing this across different regions all over New Zealand. Now, some may go, well, that doesn't really apply to me because I'm in Australia. But what you need to understand is when you thought these things weren't possible during a recession, they definitely are. And this is just one example. The other thing I want to bring to light is net debt as a percentage of GDP, projected 2020 and 2021. This is from the IMF Fiscal Monitor, and we can see here Japan at 169%. We've got the US at 107%, and we've got the UK at 86%. Australia is sitting here at 36%. Okay, that's not amazing. That's not something to be proud of. But when we see it in context to what is happening in the world right now, all of these central banks, all of these economies, all these world economies have to do the same thing. And it seems like it's a coordinated move, but essentially people are cutting. There's already economies in negative interest territory. I think we're going to get there in 2021, which is going to be huge. But I think we're going to stay wherever we are, where we can't see interest rates go up. If ever, I don't think we can see it for at least the next 3 to 5 years. That's my personal opinion. I'd love to share this video again in 3 to 5 years when we finally do see an increase, if we do. But the other important thing happening is the US election. Now, I think on a broader scheme of things, it's not really going to affect Australian house prices directly. But something to note is if Biden wins, right, Joe Biden wins, then I think there's going to be a lot of volatility in the share market. It's clear that, Trump was very interested in keeping the economy afloat and helping the rich, apparently. And so I'm unbiased in this opinion of whether Trump or Biden wins. I don't really have a personal favorite or anything. But what I'm thinking is if Trump wins, we then see more stimulus come into the system. We are seeing them print more money and continue what they've been doing. If Biden wins, right, we then have a mass exodus of the share market. I think we're going to see a fall if Trump loses. And that's because I don't think Biden shares the same views when it comes to the economy and the stimulus that needs to be pumped into the share market. I think he's going to look at more sustainable, long-term sort of policies, which actually doesn't just look at the economy, and it looks at the world economy. It also looks at the America's economy as a whole, rather than just going, the share market going up at all-time highs is a good reflection of our economy. I don't think he's going to look at it like that. And what that does is it will affect the rest of the world. it will affect their share markets as well. And I think with that volatility, we are going to see some people move out of their positions in the share market. I know that if I had shares right now, I would probably be pulling it. Now, again, this is non-financial advice, but I think that volatility is not something I want as part of my long-term strategy. I want something that's going to give me passive income and cash flow. And it's something I can control, being property. So I think some people are going to think a similar way, and they might go, let's take the money out from the share market. Let's try and get ourselves into property. The mortgage rates are so cheap. They're dropping. CBA's already passed on some cuts already for their home loan products. I think we're going to see a lot more action in this space. And now with the tax rates and being, cut, I think the next round is going to also be brought forward. Small businesses are also benefiting from incentives, subsidies. They're all into the system, and there's more infrastructure spending. So I know it sounds like I'm so pro property and you should buy everywhere. I don't think everywhere is going to grow. I think look at the video I've made about property cycles and what I expect will grow in the next sort of 3 to 7 years. I don't think it's going to be your markets like Sydney and Melbourne. So it's about being careful, understanding cycles, the economy, and obviously the research itself. So guys, thank you so much for watching all the way through. I know it's been a long video. I wanted to bring you as much context around what is happening right now. But importantly, if you are interested in more content like this, smash that subscribe button and join the Passive Income and Australian Real Estate Tips Facebook group. It's a private Facebook group, and it doesn't matter if you're not from Australia. Like if you're listening from New Zealand or you're listening from the US or the UK, we are talking about things that are so global. We are talking about things that resonate with a lot of people in finance. And of course, who doesn't like to make some extra money through side hustles, or at least, start saving a lot more with some saving hacks. So definitely come join the community. I'm trying to build this community out so that everyone can benefit from having a safe place to be able to talk about these things. Guys, I'll catch you guys in the next video.